Education, heralded as the cornerstone of the American dream, has increasingly become intertwined with the predatory grip of the student loan industry. Originally conceived as a noble endeavor to democratize access to higher education, the system has devolved into a profit-driven behemoth that preys upon the aspirations of millions. The promise of opportunity has been overshadowed by the harsh reality of insurmountable debt, trapping borrowers in a cycle of financial servitude. The origins of this crisis can be traced back to well-intentioned efforts, such as the National Defense Education Act of 1958, which aimed to bolster educational attainment for the collective good. However, as the demand for higher education surged and tuition costs skyrocketed, the student loan industry morphed into a lucrative business venture fueled by government subsidies and lax regulatory oversight. Today, the consequences of this transformation are dire. Countless individuals find themselves shackled by student loan debt, their dreams of economic prosperity eclipsed by the burden of repayment. The cycle perpetuates socioeconomic inequality, with marginalized communities bearing the brunt of its impact. Also, the insidious mechanics of the student loan industry, from its origins to its contemporary manifestations, shedding light on the urgent need for reform. In American history, few industries have evoked as much controversy and scrutiny as the student loan business. Born out of a noble intention to expand access to higher education, student loans have morphed into a behemoth of profit-driven exploitation, ensnaring millions of borrowers in a web of debt bondage. At its core lies a complex interplay of market forces, government policies, and institutional greed that have transformed education into a commodity and students into financial assets. The student loans trace back to the mid-20th century, when policymakers sought to bolster national security and economic competitiveness through investments in education. The National Defense Education Act of 1958 laid the groundwork for federal subsidies to banks, incentivizing them to issue loans to students. Initially, this initiative was hailed as a beacon of opportunity, offering a lifeline to aspiring scholars from modest backgrounds. However, as the decades unfolded, the benign intentions of policymakers collided with the profit motives of lenders, giving rise to a predatory industry that preys on the aspirations of the vulnerable. The insidious nature of the student loan business becomes glaringly evident when one examines the trajectory of tuition costs over the years. What began as a modest investment in one's future has mutated into a financial burden of epic proportions. College tuition fees have skyrocketed, outpacing inflation and wage growth by a staggering margin. Universities, emboldened by the availability of student loans, have embraced a market-driven approach to education, viewing students not as scholars, but as customers to be wooed and fleeced. The commodification of degrees, coupled with the proliferation of for-profit colleges, has transformed higher education into a profit-driven enterprise, where prestige and luxury amenities take precedence over academic excellence. The student loan trap is multifaceted, ensnaring borrowers in a cycle of debt from which escape seems increasingly elusive. Loan servicers, emboldened by lax regulations and government subsidies, employ a myriad of predatory tactics to maximize profits at the expense of borrowers. From deceptive marketing practices to usurious interest rates and draconian collection methods, lenders stop at nothing to extract every last penny from their debtors. For many borrowers, student loan debt becomes a lifelong burden, impeding their ability to achieve financial independence, purchase homes, or save for retirement. Government complicity in perpetuating the student loan crisis cannot be overstated. Over the years, policymakers from both sides of the political aisle have turned a blind eye to the predatory practices of the student loan industry, prioritizing corporate interests over the well-being of borrowers. Deregulation and privatization have led to the rise of for-profit colleges and predatory lending practices, despite efforts to regulate them being met with strong opposition from industry lobbyists. The revolving door between government and the private sector exacerbates the issue, with former regulators and lawmakers often promoting the interests of the student loan industry. This crisis disproportionately affects communities of color, worsening existing inequalities and hindering upward mobility. Intergenerational transfer of debt perpetuates this cycle, threatening the middle class and exacerbating economic insecurity. However, there's hope in grassroots movements advocating for debt cancellation and tuition-free education. These efforts have gained momentum, pushing policymakers to address the moral imperative of tackling the student loan crisis. Media, academia, and civil society organizations are also shedding light on the injustices of the student loan industry and demanding accountability. The student loan crisis, with its far-reaching tentacles, extends beyond the confines of individual borrowers, permeating every aspect of American society. One of the most insidious consequences is the stifling effect it has on entrepreneurship and innovation. Burdened by crippling debt, many graduates are forced to defer their entrepreneurial dreams in favor of traditional employment that offers a steady paycheck and benefits. This phenomenon not only stifles creativity and innovation, but also hampers economic growth and job creation, as potential job creators are deterred from pursuing their passions due to financial constraints. The stress of student loan debt contributes to mental health issues like depression and anxiety among borrowers, affecting their well-being and productivity. This crisis also hampers economic growth by limiting consumer spending and hindering investment in assets like homes and retirement accounts, widening the wealth gap and economic inequality. Moreover, it undermines democracy by fostering cynicism and apathy among young Americans, and by allowing big money in politics, fueled by the influence of the student loan industry. Additionally, it strains family dynamics as parents who co-sign loans may face financial insecurity in their retirement. This intergenerational transfer of debt not only strains family relationships but also perpetuates cycles of poverty and inequality. Moreover, the burden of student loan debt can hinder young adults' ability to provide financial support to aging parents, further exacerbating financial stress and strain on familial bonds. In addition to its domestic implications, the student loan crisis has ramifications for America's standing on the global stage. As other countries invest in education and prioritize human capital development, the United States risks falling behind in the global race for talent and innovation. Even the student loan crisis tarnishes America's image as a land of opportunity and a beacon of freedom, undermining its soft power and moral authority on the world stage. The student loan crisis also intersects with other social justice issues, including racial inequality, gender disparity, and LGBTQ+ rights. Communities of color are disproportionately affected by the student loan crisis, as systemic barriers and institutional racism limit their access to higher education and saddle them with higher levels of debt. Similarly, women and non-binary individuals face unique challenges, as the gender pay gap and workplace discrimination exacerbate their financial struggles and hinder their ability to repay loans. Individuals, particularly those estranged from their families or lacking familial support, are also vulnerable to the economic consequences of student debt, further marginalizing an already vulnerable population. In conclusion, the student loan crisis is a multifaceted issue with profound implications for individuals, communities, and society at large. It is a symptom of a broken system that prioritizes profit over people and perpetuates cycles of inequality and exploitation. Addressing this crisis requires a comprehensive approach that tackles its root causes, from predatory lending practices to skyrocketing tuition costs and inadequate government oversight. It also demands a reimagining of education as a public good and a commitment to equity and justice in all aspects of society. Only through collective action and solidarity can we build a future where education is accessible, affordable, and empowering for all. Please like, share, and subscribe.